Hello, friends and customers of the SMR Group. Thanks again for watching our this week's reflection on the stainless steel industry. In the last 2 weeks, we showed you what impact this crisis and the pandemic has on the demand side and on the supply side. And this week, we will go all the way upstream to the raw materials. What have we learned so far? The stainless demand will probably go down by 11% this year overall, but the impact on the different raw materials will be different. The hardest hit will be chromium because of the weakness on the ferritic side. We expect 12% reduction on chrome demand from stainless. Nickel is a little bit better, only minus 10%, and the mildest impact will be on the molybdenum side with only minus 8% because molybdenum is more used in project businesses and they were until the second quarter still going on. But now the cliff is definitely coming, and what we can say is for 2021, molybdenum will be harder hit than the other two. So in order to analyze that, mostly the supply side and how it will react for these three metals, we have our raw material analyst with us, Robert here, who is with us since several years, and he will talk a little bit about the impact. But before I think we have to talk about the prime raw materials, we should talk about scrap, because stainless mills always want to maximize their scrap intake, and only if they are not getting enough scrap, they use more prime raw materials. That has to do with the price. Can you tell us a little bit what this crisis so far has done on the scrap supply and demand?
Yeah, sure. What we've seen earlier this year was that the scrap supply became a bit scarce. That was because the stainless steel production still went on, while the COVID virus already impacted the first use and the end use generation of stainless steel scrap. But in the meantime, the scrap supply has normalized and the discounts for nickel and chrome in scrap are basically back to normal, you can say.
Well, normal, the scrap processors don't like them, but let's say you're right, it is normal, and what you're saying, that's interesting, scrap availability for the rest of the year won't be a problem anymore. Okay, now with this, let's move on to nickel. Yeah, what do you foresee for the nickel market in 2020 for the rest of this year?
Yeah, actually I'm tracking all the developments in the stainless steel supply chain when it gets to the nickel supply. And what I saw is that so far the impact on the supply when it gets to production cuts is not as big as I expected it to be. And especially the NPI production in Indonesia I see to be the biggest negative price factor for nickel this year.
You mean the increase in Indonesia will put pressure on the nickel prices?
Exactly. Because China, even though the Chinese production of nickel pig iron is expected to decline this year due to the export ban of Indonesia and the export stop in the meantime from the Philippines, will definitely reduce the production in China for now.
Okay, so nickel prices have a downside potential. We come back to that in more detail at the end of this discussion here. Let's move on to chrome.
Yes.
What do you see in the chrome side, on the chrome supply side?
Yeah. Well, chrome, I think for chrome we have to talk especially about South Africa. What we saw was with the lockdown that all the supply basically dried out for quite some time. It was even prolonged. And what we saw as a reaction was that the prices for chrome ore significantly increased up to 40%. And also for Indian chrome ore, we saw a similar situation, where the country basically had a lockdown, and this especially in those months where they would be producing a lot. And now we're facing the South African winter, which basically means that it gets even more expensive to produce the ferrochrome. And also monsoon season in India, which then again tells me that there is an upside potential for the prices for this year.
So chrome totally different from nickel, rather upside than downside price potential for Q3 and Q4. Okay. Yes. Yeah. Do you think that, because there's not recession we are experiencing, we had several recessions, at least in my career already, starting in 1991, and then, I mean, that was after the first Gulf War. Then we had 2001 after Desert Storm, September 11 actually, you know, and then the second Gulf War, there was a global recession, and then everybody, even the people who are not so long in the business, you know, remember 2008, 2009, the financial crisis. Yes. Do you think that these crises could teach us a lesson for the further development in the raw material pricing this year?
I think they can, but you have to analyze it a bit more in detail, and I have prepared something for our friends and customers to take a look into.
Okay, let's look at this. What I'm showing you first is here the nickel price development in the previous 3 global recessions that we had. This is all on an index basis, and 100% is always the month before the crisis began. In 1991, that's the first recession we chased here. First, before we go in that, you see this is where we stand at the moment. Nickel prices declined by about 18% 4 months after the crisis hit, and then they started to recover. In the oldest crisis here in 1991, first Gulf War, prices did not react at all for a long time, for more than half a year, and then they started to go down by almost 20%. In 2001, that looks very strange. There was a fast reaction after September 11 and the second Gulf War, and then prices actually started to climb up again. Explanation for this is, I think, the strong demand at that time in China, where the stainless production ramped up very fast. In the last crisis, about 10 years ago, we had a situation with a very strong reduction by 40%, then a long stagnation, and after about 9 months again, things started to recover, not to before the crisis, but strongly. But here for this curve, you have to see the starting point of $19,000 per ton. This time we went into the crisis with a much lower reading of below 13,000 actually. So this is also probably not a good guideline for what will happen in the nickel price to come. But it shows that nickel usually reacts fast a little bit, then finds some plateau, and then if the crisis goes on for a longer time, nickel prices decline again. On the ferrochrome side, we are standing here. So actually the crisis had no other than that the supply side, what Robert explained to us, was restricted due to the shutdowns in South Africa and India. And so we have today a higher price than we had in December 2019. The crisis in 1991 shows very long stay, and only also similar to nickel, after 8 months, prices started going down by between 15 and 20%. And in 2001, the second Gulf War here, no impact at all, and actually later on growing prices, also driven by the strong demand from China. Only in the financial crisis 10 years ago, significant reduction, but also here look at the starting point we had in 2009 with 240 cents per pound, much higher than today. So a 40% or 50% reduction in pricing is absolutely impossible as we speak now. So if we look at that, you can say, you can draw some conclusions for what's happening in a crisis, and the resistance by raw material is a little bit different, but the timing of it depends on other factors as well. Now, I would say one thing that is different today to what it was, for example, in 2008, 2009, is that China, the growth in China is slowing. Yeah, even that the next year will become back to pre-crisis levels in stainless demand and production, but it is not growing at double-digit rates anymore as we had in these earlier crises there. So, summing up, for nickel, we see this year a surplus. After several years of nickel deficits, 2020 will be the first with a surplus. Prices, we think, have more downside than upside potential, and that would be in the first quarter we had an average of 12,800. I wouldn't be surprised if in the fourth quarter we will be between $10,000 and $11,000 per ton. For chrome, there will be a deficit this year. Supply reacts stronger than demand, and that's why we see more, rather an upside potential. We had 87 cents per pound in the first quarter, and we think it could be somewhere between 95 and 100 cents per pound in the fourth quarter this year. Last but not least, molybdenum. We probably difficult to forecast because moly is produced to some extent as a byproduct of copper. But we think there will be a small surplus this year, and that means prices can come under pressure from 10.6 at the moment, or average first quarter, probably to 8 to 8.50 is a realistic reduction that we could see in the molybdenum price. Also because molybdenum will be hard hit in the second half of this year, much harder than in the first half of this year. So that's summa summarum what we see for raw materials for the rest of this year. Okay, that was it for this week. I think very interesting. The conclusion is similar to stainless, that if the raw materials adjust their supply, and this means mining and smelting, which is not easy, fast to the new lower demand levels, then they will prevent price pressure on their products. And we will see over the next few months whether this is the case. We got the impression that in chromium they are probably reacting faster and stronger than probably nickel and molybdenum. Okay, with this, I can only say next week, in our next week's reflection, we will analyze what impact the pandemic has on the whole supply chain. That means from the raw materials we had today, to the mills, to the service centers and the fabricators, and talk a little bit about profitability in the supply chain towards the end of this year and probably also in 2021. Okay, if you have any comments, questions, if you want to know more, please visit our website. You see below here our web address, and you can also send us emails. Of course, we are always accessible at marketresearch@smr.at, or in the meantime, we are also on YouTube, and you can see all the previous issues of this series. Thank you very much, and I see you hopefully next week.